Today, we're diving into something pretty fascinating: the connection between that little three-digit number, your credit score, and the biggest purchase you'll probably ever make, your home. You know, we hear all the time that a good score matters, but how much does it really matter? The answer might completely change the way you look at your finances.
So let's just cut right to the chase. Let's ask the big question right up front. Not in percentages, not in weird financial jargon, but in actual dollars and cents. What is a good credit score worth when you finally sign on that dotted line for a mortgage? Are we talking a few $100, maybe a couple thousand? Well, according to a brand new nationwide study, the answer is this: $46,206. Yeah, let that sink in for a second, because that's not a typo. That is the kind of money, real money, a better credit score could put right back into your pocket over the life of your loan.
So where does this crazy number come from? It's from new research by a company called AD Mortgage, and they analyzed exactly how improving your credit score turns into real savings on your mortgage. And we're not talking about pocket change here. We're talking about potentially life-changing money.
Now here's the best part. You don't have to perform some financial miracle to see the benefit. The study found that even small, steady improvements, just bumping up your score little by little, can have a massive impact on what kind of house you can afford and how much you'll end up paying for it.
All right, so if we're supposed to be improving our score, what are we aiming for? Well, the study points to one specific target. You can almost think of it as a magic number in the mortgage world: 760. So what's so special about 760?
A score of 760 or higher is what lenders call a prime FICO score. It's basically the threshold where they stop seeing you as a potential risk and start seeing you as an ideal customer. Crossing that line is like getting a key that unlocks the absolute best interest rates they have to offer.
And what's really cool about this study is that they didn't just look at people who already had a 760 score. They modeled the journey. You know, what happens when a person with an average score for their state works their way up to that prime 760 level? And that's exactly where all these huge savings numbers come from.
Okay, so we've got our goal, a 760 FICO score, and we know the reward is potentially massive. But the next logical question for just about all of us is, how long does that actually take? Are we talking about a one-year project, or is this more like a 10-year marathon?
And this is where it gets really interesting, because it turns out where you live matters a lot. The study found a huge difference from state to state. For instance, in Minnesota, where the average credit score is already pretty high, you could hit that 760 target in less than a year. But down in Mississippi, you're looking at a 4-year journey.
Of course, for most of us, it's going to fall somewhere in between those two extremes. Think somewhere in the 2 to 3.5 year range. So in Florida, it's about 2.5 years. In Texas, a little over 3. It just gives you a more realistic picture of the kind of time and commitment we're talking about.
All right, so we've talked about how long it takes. Now let's get to the fun part, the reward. Because the financial payoff for hitting that 760 score is definitely not the same everywhere. In fact, it can change dramatically depending on what state you're in.
I mean, just look at these differences. They're incredible. In states with high home prices, the savings are just astronomical. Hawaii is at the top of the list with over $46,000 in savings. And the reason is pretty simple, right? Higher home prices mean bigger loans. So a tiny interest rate difference on a huge mortgage in California is worth way more than on a smaller one in, say, West Virginia. But hey, even there, you're still looking at almost 10 grand in savings. That's a new car or a dream vacation.
To put this into perspective, think about it this way. In a state like Hawaii or California, the total savings you could get just from improving your credit score can be more than 40% of what a typical household makes in an entire year. That's like getting a massive one-time bonus just for getting your financial house in order.
But let's flip this around for a second. It's not just about the carrot. There's also a pretty big stick. The study also looked at which states have the harshest financial penalties for having a score that's below that 760 prime level. This is the price you pay for not being prepared. And here they are. These are the 5 states where those rate penalties are proportionally the steepest. So if you're looking to buy a home in Texas, Louisiana, Georgia, Mississippi, or Alabama, having a score under 760 is going to hit your wallet harder than almost anywhere else in the US. And just how big is that penalty? Well, in a state like Texas, the extra interest you'd pay for having a subpar score can add up to more than 10% of the original loan amount over those 30 years. That is a huge, huge penalty. So let's bring all this data home. What's the real bottom line here? It's actually pretty simple. Your credit score isn't just some abstract number that banks use. It's a direct reflection of your buying power as a consumer.
You know, the CEO of the company that did the study, Max Slyuserchuk, said it perfectly. You and your neighbor could earn the exact same salary. But if your credit scores are different, your financial realities, what you can actually afford when you go to buy a house, could be worlds apart.
So what's the game plan? What can you do with all this? It's pretty straightforward. First, make 760 your goal. It's a clear finish line for getting the best rates. Second, understand the stakes where you live. Know if you're in one of those high savings states or a high penalty one. And third, start today. Every single point you add to your score is another dollar that could end up in your savings account instead of the bank's.
Look, in the end, it's really easy to think of your FICO score as just some random number that a computer spits out. But as all this data shows, it's so much more than that. It's a number that tells a story about your financial habits, your buying power, and ultimately, your future. The only question left is, what kind of story do you want yours to tell?